Hey guys, Rick Stein here, RLS Properties. You've seen a lot of videos lately of my partner Adam, who was a general contractor and does the rehabs on our properties. And he does a fabulous job. And they always sell for top dollar. I'm lucky to have him as a partner. But equally as important to the rehab, which of course is very important, is the financing. Because the financing can make or break a deal. So I'd like to talk a little bit about the difference between hard money and private money, because I get calls from new investors saying, Rick, what's the difference? Isn't it the same thing? Well, a lot of hard money lenders call themselves private lenders, but there's a difference. First of all, if you went to an S&L, Bank of America, Wells Fargo, or Chase, and asked, say, listen, I'm going to borrow $100,000 to buy the property, then I need $40,000 to rehab it, that's not the loans they do. So if you went to a hard money lender, which is usually an institution, even though it's not a bank per se, they will lend you a percentage of the cost of the property. In other words, the cost to buy the property could be 70, 80, could be 90%, depending upon your track record and the property, and to some extent your credit worthiness. And then they'll lend you generally 100% of the rehab cost, which they'll escrow. So they're not going to give it to you up front, but they'll escrow that $40,000 or whatever it is and give it to you in increments as you need it. They call it draws. Hard money can be very expensive because they're going to charge you points. One point is generally 1% of the loan amount, and therefore generally 2 points was what they charge, will be 2% of the loan amount. Then probably 9, 10, 11%, which is not a killer because it's a short-term loan. You're doing a rehab, you're in and out 6, 7 months, the loan is for a year, and it shouldn't go that long. So even though it's 10%, 11%, it's not a killer, but you got to figure out those numbers when you're doing your analysis. If it works, it works. They're going to charge you an appraisal fee. There's a lot of paperwork involved. They want to see tax returns. They want to see your financial statement. They want to see your track record. They want to see a scope of work. And the paperwork can be voluminous. But if you establish a relationship with them, you can go back to them again and again and again. But they have their criteria, and that's the way it is. You have to understand that very often they have investors who are investing in them, and they have to go by their criteria. They call themselves private lenders. I don't. A private lender is your dentist, your doctor, someone who has money in a self-directed IRA who wants to invest it, and who has money in a CD now at 1%, and you say, listen, if you want to invest in my project, and I always put it as investing in a project. I don't ask to borrow money. It's the same thing, but it's the way you phrase it. People like to invest. They don't like to lend. Same thing. But if they're investing in your project, then the terms are between the two of you. So that same property where I need $100,000 to buy it and $50,000 to rehab it, but we'll say the after repaired value is $200,000, I can make a phone call to one of my private lenders and say, hey Joe, I need $100,000 to buy it, $50,000 to rehab it. We'll do it at this. Now he's not going to escrow the $50,000. He'll lend it to me all at once. I don't have the same paperwork because I have a track record with him. So I can borrow the entire amount, and I have the entire amount that I need for the acquisition and the rehab, nothing out of my own pocket. And I don't have any of the other costs because he knows he's going to be in first position. I will, of course, have a promissory note and a mortgage that will be recorded. You do it legitimately, but it's much less paperwork. I can borrow the whole thing. And once you establish relationships with people like that, you can go back again and again and again. Someone who has money in their self-directed IRA, who has to lend it out, otherwise it's sitting in a money market account. So briefly, that is the difference between hard money and private money. I'm going to do another video in about 2 weeks or so on another topic on financing. Talk to you later.